We're going to watch this pattern. If it breaks above after a bull flag forms, then essentially I would be in the position to think that we retest our all-time highs, maybe even go higher than that. One thing that I'll be watching is that former bull flag, this trend line. So this trend line, if we really did break up here, I actually think we'd go higher than our all-time high, and you'd go back to this line right here. And again, let me change the color on that so it really stands out. So low pivot, low pivot, low pivot. We break down, we retrace to that line. You can see the retrace to the yellow line, right? It was also this orange line, which was great, but it also kissed the yellow line. If we break above this orange line, you probably go up here, and we'd probably get to about 125, 126, depending on where it hits along the ascending trend line. That's going to be the level. But yeah, I think that's very interesting. The other thing that's kind of cool too is look at this. If we just connect the high to the high, look, boom.
Bitcoin traders have their eyes on a critical setup, and Gareth Soloway is mapping out the path step by step. He's tracking a larger ascending trend line that's been built off multiple pivot lows. Right now, that line sits in the 125K, 126K zone, depending on timing. Historically, when price breaks away from a major trend line, it often comes back later to kiss it before committing to the next long-term move. That makes this level more than just a number, it's a magnet. In the near term, the key battleground is 117K. If Bitcoin can hold that area and carve out a proper bull flag, the technical picture tilts heavily toward upside. The first logical stop is obvious: the old all-time highs. Those levels, still acting as overhead resistance, will almost certainly draw in sellers and profit takers. But Soloway notes that strong momentum could mean the move doesn't stop there. Should Bitcoin clear the highs convincingly, the bigger roadmap points toward that ascending trend line around 125K, 126K. The confluence of diagonal support turn magnet and horizontal resistance creates a decision zone that could dictate the next phase of the cycle. So the playbook is straightforward: consolidation above 117K, breakout through the highs, then a potential stretch into the mid 120K region. Beyond that, Soloway says the market will have to decide whether to pause or open the door to an entirely new leg higher. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
In those shows all week long, I've been saying, guys, 117,000 is going to be resistance as we break above. And there was this little inverse head and shoulders. If we go back here, and again, this is on the daily. It looks a lot better on the hourly, but you can see shoulder, head, so shoulder, head, and shoulder. And inverse head and shoulders are bullish patterns. Head and shoulders are bearish. Inverse, meaning upside down, head and shoulders are bullish. Now, again, for those of you that may be new, I can put this in. In fact, let's bring this to, I always like to do the teaching on this. So let's go to our hourly chart, and we go back over here, and I'll draw it in. So here's your shoulder, upside down head, right? Upside down shoulder. And then where did we break out? Right here. This is what's called the neckline in technical analysis. And that's where it triggers. Okay. So essentially the formation can be there, but until you break above the neckline, which basically connects the armpit to armpit, it's kind of, you know, as it sounds, it's the neckline. It doesn't really trigger. Once it does, then you get the upside. And we've seen that, right? We've seen a beautiful move up. And again, if we flip back and let's go back to the daily chart now. Okay, so that was that pattern. And again, now we're back on the daily, and this is where it was right there. So maybe you can see it a little bit better. So once it breaks out, we knew that this area right here was going to be our next resistance. And so the beauty of this, I mean, this is just still, even to this day, it just rocks my world how cool technical analysis is. But the reason why in the My Trading Game Plan show, I said 117,000 was going to be resistance was because on the chart, I could see this ahead of time. Look at how you got up here, and then this area just became like incredible support. It broke here, came back, and then broke back above, became support. Look at how it acted right there again. Pause, broke down, and then look, you came back up and it got rejected. And this really just proves its power again and again. Even though occasionally you're getting through the line, it always afterwards reestablishes itself. And that's unbelievably important on the charts, right? And so here it reestablished itself. So we have to assume until proven otherwise that it's reestablished it here. And sure enough, look at what we hit, 117,000. And now it's paused for the last couple days. Now, what I'm watching here as a technician of the charts is, number one, I knew it was going to be resistance, right? So 117 was going to be resistance, but The beauty of technical analysis is that just because something's resistance, it can eventually break above that resistance. And the trick is, or the educational nugget of wisdom is to watch how price acts after you hit the line. If you get a huge reversal, that's not good. That is not good. That tells you that there's massive sellers there, and essentially the sellers are outnumbering the buyers by a massive margin. If you get a small kind of small check back and it doesn't really pull back much, what does that create in technical analysis? It creates a bull flag. All right. So right now, and listen, 2 candles of sideways consolidation don't make a bull flag. Let's be fair. I at least like to see like 3 to 5 at minimum. But if we were to stay like this, right? If we were to let's just draw this in. So if we were to just go like this for a couple more days, then all of a sudden, this pattern, what type of pattern is this? It's a bull flag. What do we think? Well, then if you form that, it starts to favor a breakout above the resistance line. Okay. So right now, again, please understand, I don't want anyone jumping to crazy conclusions. As a technician, I'm respecting the action, but I'm not. Again, the chart has to form it before I jump to the conclusion. So again, this is a good start for bulls to see very mild pullback because it could be forming a bull flag, but it hasn't formed it fully yet. It's not a mature bull flag. If it does, favor the upside. Now,
Gareth Soloway points to a clear shift in Bitcoin's chart after the second top. A heavy red candle swallowed the prior green one, a textbook bearish engulfing signal that confirmed a short-term reversal. From there, price slid lower and landed in a crucial zone between 112,000 and 107,000. That band isn't random, it's the same range that acted as stubborn resistance earlier in the year. Bitcoin battled it several times before finally breaking through. In technical terms, once resistance is broken, it often flips into support, and that's exactly what we're seeing now. Each time price has tested the zone, it has shown a pattern of bouncing when defended, dipping when broken, and reclaiming it shortly after. That's why Soloway sees it as the battleground to watch. For the bulls, the mission is simple: hold that support and build a base for another push higher. But the risk is clear too. If Bitcoin loses 107,000 with conviction, the next logical target is 100,000 flat. That level lines up with prior swing lows and marks the next major spot where buyers have proven willing to step in. In Soloway's words, 107K is the line in the sand. Break it, and 6 figures become the likely destination. Let's get back to the interview.
So when we look at this chart of Bitcoin, what do we have? We have a classic double top, right? So this was your double top right up here. And just for educational purposes, understand that double tops almost always break on the second one a little bit higher. Now, why does that happen, right? So why do you get a little bit of a break above the previous high for double tops? And again, listen, it doesn't always happen, but I'd say about 85% of the time, you're always going to breach the previous high. And the reason is very simple, because you have a lot of bears that have shorted, right? So they shorted after this high and this rollover. And the idea is, where do they place their stops? What's the psychological place to place your stop? And that would be at a pierce of the high. So the algos know that. They bring it up, they pierce the high, and that causes stops to be triggered amongst shorts. And then remember, when someone covers a short, they actually have to buy back Bitcoin. And so it creates more buying. In addition, psychologically, what do we know? All right, when a previous high is taken out, what's the psychological impact to investors? And that's, oh my goodness, I'm feeling the FOMO. I've got to buy in. And that creates that last little pop above before the pullback comes into play. And so I always like to explain that, because trading and investing is such a psychological game. And the more we understand why things happen, the less emotion we trade with, right? All right, so the other thing to note here is, again, this reversal candle. Anytime you have a double top with a big green, but then a bigger red to the downside, that's always a bearish reversal signal. In this case, pretty much an engulfing reversal candle in technical analysis. And it basically tells you that price has a high probability of going lower, which is exactly what it did. Now, as price came down, it came into what we would call a support shelf or support zone. Why? Well, you can see over here, going back to May 2025 all the way through June into early July, there was a lot of chop before price broke out. And what I like to do here, folks, is we're going to put in a little support zone from this high right through here, right? We're going to bring it all the way over here, and we're going to bring it down to this area right here. All right, so notice again, you have your high and you have your low, and then you kind of went up, then you broke a little bit lower, but then you came up in here, right through this area right here. Notice how this area of support now becomes once it breaks out, it becomes, so this was resistance, right? So resistance over here, struggle, 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 breaks out, and now it becomes support. Here it hits, boom. Here it comes in, hits again, okay, bounces. Here it comes in and breaks, and it becomes a little bit of resistance, tries to get back above, rejected, goes to the low end, comes back here again, rejected, and finally breaks back above. Now, that gives us our basis for where our current support area is. So if you're a bull, this is now the zone you're following. Anything between 112,000 down to about 107,000. All right, so there's a 5,000 range, and listen, 5,000 is pretty wide, but at the same time, it's Bitcoin. So like that could be 1 or 2 days of price action. And so the idea is that when you have a zone, you expect support. In this case, support at this zone, and you really don't want to see Bitcoin break below that zone. You can buy as long as it's in that zone, but if it breaks below, you have to think about, do you exit the trade? Do you stop out? Because it's now broken the zone, okay? So going back to the chart, we don't want to see it break basically below 107. If it breaks below 107, you're likely headed down to about 100,000. This low and this area right here creates our next area of support right in this zone here. You can see this was a push up, low, low, and low right in this vicinity, right? And essentially you can put a trend line right at 100,000 basically and drag it across right there. And you can see every line kind of, you pierced it here, but essentially that shows you that support level. So we know our downside zone where we have to watch. If you're bull on Bitcoin, you don't want to see 107,000 broken. If it is broken, then you're likely headed down to 100,000.
What's unfolding on Bitcoin's chart right now carries the weight of more than just lines and candles. It's about how the market decides to respect or abandon the foundations it has built over the past year. Levels once thought of as ceilings are now being tested as floors, and every bounce or break is reshaping trader psychology. The pattern of defending key zones, reclaiming lost ground, and stretching toward untested regions has created a tug-of-war between conviction and hesitation. Add to that the memory of past highs and the gravitational pull of rising trend lines, and what emerges is not simply a technical setup but a narrative about whether this cycle has the strength to expand into something much larger. Could the resolution of these pivotal levels end up defining whether Bitcoin matures into its next growth phase or retreats into another drawn-out consolidation? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.